Internal Revenue Service IRS tax news. Here's what taxpayers need to know about reporting tip income on their tax return. IRS Tax Tip 2021-67, May 13th, 2021. Generally, income received from any source, including tips, is taxable. So the IRS here is talking about tips, tips being another area that's of concern to the IRS because oftentimes tips are coming directly from customers to an employee or someone providing a service, and therefore the customer typically will not be issuing a 1099, and if it's a cash transaction, there's going to be very little record of the transaction, unlike if it was a credit card or some other transaction. And given the fact that it came from a customer, you might not have any requirements for the employer to report it, say, as income on a W-2 or to 1099 in some way, shape, or form. And the IRS is going to say here, well, tips are still taxable, right? They want you to report the tips, of course, because it's still income as income, even though it can be a little bit more difficult to track the tips. Now, obviously, where you work, the tips will be changing depending on where you work at. And the IRS does put pressure on things like restaurants and whatnot to try to get the tips to be reported in some way, shape, or form. So you might pool the tips together, for example, and then the employer might basically have some format to be allocating the tips to individuals. If you get tips through a credit card, then obviously it's more likely that it's going to have to be pooled together and paid out in some way. It's going to have to go through the employer in some way, you would think, in that case, and therefore it's more likely to be reported as opposed to if you just gave, a cash tip to somebody, then it's less likely that it's going through the employer possibly. But obviously, service type of companies have to adjust or have had to adjust their model a little bit to try to compensate for the fact that the IRS wants to track the tips and tax people on them. So again, if you work and you get tips, then you want to have an idea of how the tips are being received, how they're being tracked, and your requirements for recording the tips. If you're an employer that deals in a business that has tips related to it as part of your business structure, for example, of course, waitresses and waiters often earn tips as a large part of their income. You got to be in compliance and say, well, what do I need to do with regards to the reporting of the tips? Okay, so here's some information to help taxpayers report temp income. All tips that taxpayers receive are income and subject to federal income tax. Taxpayers must include all tips they receive in their gross income. This includes tips directly from customers, tips added using credit cards, tips from tip splitting arrangements with other employees. Now, the one that's going to be the most difficult, obviously, is going to be the tips directly from customers. And oftentimes, again, the government would like to basically get, kind of stop that model, that business model from happening, meaning stopping restaurants from having employees that get a lot of their wages, not from being paid by the employer, but being tipped by the customers, which is a classic business model. But obviously, the IRS doesn't have the record. They can't force anybody to give them the information on how much the person's earning that way because they don't get a W-2, they don't get a 1099, and they can't force the customer tipping to give them any information. If it's a cash transaction, then there's no basically audit trail to it. So this is the one that the government is most skeptical of, and it's probably, has been putting pressure to try to reduce so they can have more control over people and their lives. Tips added using credit cards. So obviously the credit cards adds another level. So when you tip somebody at a restaurant or something like that, and you just add it to the credit card instead of just giving them cash, then it's got to go through the employer, and there's going to be that audit trail involved on it. So it's more likely that the employer is going to have to, divvy that out in some way. And again, generally the IRS seeing that audit trail will then put pressure on the employer to have to report the tips in some way, shape, or form. That's where they have the leverage. So tips from tip splitting arrangements with other employees, that's another kind of arrangement you might have. And there's debate as to how fair a tip splitting arrangement or how exactly that works, because one person might work harder or one person might do a better job. They get a bigger tip. How should you split up the tip splitting? And that type of situation can be debatable. But again, in the tip splitting type of situation, the employer now is being kind of forced to be in the middle, and therefore they're going to have to see, and the money's going to go through them so that the IRS can then pressure them, right, to have to report the tips in some way, shape, or form. So in those cases, you might get it reported to you on your W-2 or something like that, whereas this first one, you may not if you just get cash tips, and technically you should still report it in income on either of the methods. So the value of non-cash tips such as tickets, passes, or other items of value also income and subject to tax. So you might say, what if I get something else other than cash? Someone gives me tickets to games or something like that. I'm in a certain kind of industry where there's stuff going on all the time and they're giving me free passes or whatnot. That is a form of compensation. So again, technically, you should be reporting it in income. 3 things can help taxpayers correctly report the tip income. Keep a daily tip record. So they want to keep a record of the tips, report tips to their employer. So this is the one the employer or the IRS would kind of like to force to happen, you would think, right? Get the employer involved. That's where the IRS can come in and leverage the employer. That's where they have the pressure. So report all tips on their income tax return. Use the interactive tax assistant. This tool provides answers to tax law questions. Taxpayers can use the interactive tax assistant. There's a link to that here on irs.gov to find out if their tip income is taxable. If an employee receives $20 or more in any month, they must report their tips for that month to their employer by the 10th day of the next month. The employer must withhold federal income, Social Security, Medicare taxes on the reported tips. So there it is. There's the IRS saying we don't, if you make tips over a certain amount, we want to get the employer involved, and we want to pressure them to tell us about the money and take your tip money from you and give it to us in the form of the taxes. So more information can be found on this in the reading material below, and there's links to them. There's Is My Tip Income Taxable? Form 4137, Social Security and Medicare tax on unreported tip income. Publication 1244, Employees' Daily Record of Tips and Report to Employer. Tip Record Keeping and Reporting, Publication 531, Reporting Tip Income. There's links to those items here. There'll be a link to this in the description.